Welcome back to another episode of Decentralized Chain. It's Faraz, and in today's episode, we are going to be talking about DeFi yield. In fact, we're going to be having an interview with the co-founder. But before we do, if this is the first time you're here and you want to learn more about crypto, whether it's news, insights, or analysis, to help you get that edge, then start now by hitting the subscribe button below and the bell notification icon so you don't miss any of my upcoming episodes. Better still, why don't you come on over and join us in the Telegram community? There are plenty of crypto enthusiasts, from novices to pro traders, so no question is too big and no question is certainly too small to ask there. They're a friendly bunch. Now, as I mentioned, in today's episode, we are going to be talking to the co-founder of DeFi, Rosmer. And really, DeFi yield is a protocol for cross-chain asset management. They use that based on machine learning. Better still, Michael is also the co-founder of The Wall Street Era Is Over. Now, this book here is really one of those essential guides that you certainly should have on your bookshelf. Call it a DeFi Bible, call it a DeFi Testament, whatever. There is something in there for all levels of crypto enthusiasts. And I certainly, when I was going through it, picked up quite a few things that I didn't know at all. And it's still good to have as a quick reference as well. So certainly go and check that out. Now, let's jump into the interview and speak to Michael. It was a great session. It wasn't just purely around DeFi yield, but also we were talking about DeFi as a whole. We were talking about some of the challenges. We're talking about sovereign states adopting Bitcoin. What does that future actually look like? We're talking about tokenizations of assets. So definitely an interview that you want to stick around to, watch to the end. Drop a thumbs up, drop a like, and I will see you on the other side. Michael, welcome to the show. I'm going to say it's a first actually to have someone on the show who's actually co-founded the following book, Wall Street Era Is Over, which is pretty amazing, to be honest. Even after being in crypto for about 3 to 4 years, certainly going through your book, I'm learning stuff every day, and crypto is always moving at 100 miles per hour, as you well know.
It is, absolutely. I'm super glad you enjoyed the book. That's great.
And also, not just the co-author, but also co-founder of DeFi Yield, which we'll talk about as well. I mean, Michael, how are you doing? How have you been?
I'm doing great. Super busy these days. Lots going on. So, maybe not getting quite as much sleep as I would like, but otherwise I'm doing really well.
Yeah, no, I find bull seasons also do that in general. You're just like constantly waking up at like midnight, quickly having a look, and then a nag from the wife, turn it off, I can't sleep.
Yeah. Right now, lately, I've had this sense of like, I don't know if I want to leave open positions while I go to sleep. So there's kind of like this staying up to see how things are going and like, what should I do about this? So, yeah.
Well, but look, Michael, I before we sort of start talking a bit more about, the ins and outs of crypto, I've got to ask actually, right? And it's one of these things that kind of, do you personally feel that crypto will change fiat? As in, do you see at a point in time where we're displacing fiat, or do you kind of feel that it's kind of coexisting?
Well, okay. So, I mean, obviously, from the standpoint of central banks changing how they handle money, we see China as a leading indicator that all money will be digital given time, right? I mean, even just talking about Visa and MasterCard are kind of digital, right? Yeah. Like, it just makes more sense. Why would you ever have paper that you're exchanging around? It's so hyper inefficient. So of course that will happen. And, using some sort of blockchain technology in order to do that makes logical technological sense. Now, as I understand it, something like the digital yuan is basically centralized. Yeah. So it's not decentralized ledger technology. I think the real question is, will we ever end up in a situation where rather than being digital, it's decentralized and under some other people? I think that there is a chance that happens. And here's the main reason why. If I look at a lot of nations, the US basically weaponized the US financial system, and it's hurting them a lot.
Yeah.
So imagine you're Iran. And suddenly they're like, you know what, we're just cutting you off from the US financial system. That's it. It's over. We're not allowing you to transact. Well, this is a sovereign nation we're talking about here. They don't want that. So, they can use their own currency, but that's not so strong. They can't interact globally with it. Then you're in a situation where it's like, are you going to trust the Chinese not to do the same to you? Probably not. So as a result, something decentralized for small nations that are maybe a little bit concerned about how bigger nations will push them around sounds really compelling to me. And I don't know whether that's Bitcoin or what the ultimate end result is, but the idea of having something decentralized that can't be bullied, I think has a lot of merit. And I don't know exactly how that will coexist with other technologies, but I think it's pretty likely that you get enough momentum from enough countries that it at least plays like side-by-side role along with some of these other currencies. That would be my guess.
Okay.
You?
My view, I mean, and the way I kind of see it, and you touched on the topic earlier, right, is that a lot of the countries are moving towards their own digital currency, right? We're doing it in the UK. We had an announcement from our the Chancellor of the Exchequer, Rishi, and he mentioned, we're also going to be moving towards a digital pound as well, right?
Yep.
And I personally, me personally being a real, I'm not going to say being realistic, but my personal view here is that I think at some point we are going to see digital. Actually, let me rephrase that. I'm going to call it blockchain currency because I'm going to use digital currency as being the currency for the currency of nations, right? I'm going to see blockchain currency being used side by side digital currency, but there has to be a digital currency. In all honesty, there has to be one. Purely, I don't ever see Bitcoin, ever really being used as a means of transactions. I just don't see it. It's slow, it's outdated. You can't use it for that purpose. But clearly, that has stemmed innovation across the board. And there are various technologies out there that allow you to speed up those transactions, albeit with an underlying digital currency. And that's kind of really my view. Maybe I haven't answered the question, but my view is you're right. I think it will be side by side, but I don't really ever see a world where I personally feel that crypto will outweigh the digital currency of a country. I think this will always be. And it won't be on par either. This is just my view. It won't be on par. I think it will be there to complement it more than anything else.
So what do you think about the idea that, the Michael Saylor argument is that basically Bitcoin is accretive, right? That over time, this money goes in more and more and more, and it gradually expands.
Yeah.
And that some sort of decentralized digital currency would gradually have that. Again, just thinking about a lot of smaller nation states that aren't going to be in a situation where they're going to really have any viability of their own, right? Like, a lot of communities talking about El Salvador and kind of these announcements. Like, nobody cares about El Salvador. Nobody cares about an El Salvador dollar, whatever.
Yeah.
Like,
no, they don't. Yeah.
So it's like, all right, you might as well have something decentralized. And maybe you get enough of these that it starts to add up, that there's enough that countries start saying, hey, listen, like this becomes the reserve. Like, can you see a possibility that ever starts to happen and just get enough momentum?
Yeah, no. And here's my view on this, Michael, right? Is that, and you're right, for the smaller state nations where, currencies are hyperinflated, etc., and their native currency isn't worth much in comparison to a dollar or somewhere else, right?
Yeah.
I get that. But then really my view here is a country like, let's just take the United States of America, right? They're never going to adopt Bitcoin as a legal tender. It just wouldn't happen. It would hurt their monetary system too much, right?
Sure, absolutely.
And I don't think there's any situation where I would ever see that happening. The smaller states, or not the smaller states, but the smaller nations can go ahead and adopt Bitcoin. That's fine. They can call it legal tender as well.
Yeah.
And to a certain extent, those smaller nations can potentially trade amongst each other in Bitcoin. Okay.
Yeah. Then
that's completely fine. You keep the value there. But at the end of the day, when you have super nations, when you have larger nations, China, United States, I just don't see how that works, because if they're not willing to accept Bitcoin as a legal tender and the smaller nations want to use Bitcoin as a legal tender, the only nations that are going to be trading at that level will be nations who are smaller but have accepted Bitcoin to trade between each other. I don't think they'll necessarily have the openness of the larger countries at that point to be able to use more cross trades. But at the same time, that then does make the small become the many to a certain extent. And at some point, somebody may be forced to say, right, we will accept Bitcoin for, Bitcoin will be used and can be used to buy a barrel of oil, for example.
Yeah.
At some point.
Yeah, you get kind of like the long tail effect becomes so great. It's like collectively those nations actually are, a decent sized nation, right? What do you think about the flip side of this, which is, it's kind of one of the, in my view, one of the stronger arguments against Bitcoin becoming like the established store of value, which is the tokenization of real assets and the ease of exchanging those real assets on some other platform, right? Whether it's, you're talking about, you put NFTs on Cardano, or, you get Ethereum version 2, et cetera, whatever. That would create basically, you wouldn't have any particular asset. It would just be, there's so much exchangeability that, you don't need to be that way. You don't have to have a central thing. You can just say, hey, listen, I have tokenization of all these assets, which we know basically in real time based on markets what they're worth. And I can store value in, a token of a house, a little share of a token of a house, or a million other things, and kind of exchange accordingly. It's all interoperable, so who cares?
Look, I think it's interesting you mentioned tokenization of assets, because I've had plenty of other projects come on the show here, and we talk about tokenization of real world assets onto DLT technologies. My issue with this is, and I love the idea, I'm pro for the idea, don't get me wrong here, is how do you make that tokenization legal? How do you enforce that tokenization of an asset cross-border, right? It's easy to do it within a country, right? If you're doing it within a country, you're within the confines of that country, you're within the compliance and the regulation. So it's easy. There may well be, let's take, for example, real estate. Let's just say we decided to tokenize real estate, right? Tokenize it into an NFT, okay? That NFT is supposed to represent that real estate item there. Now, there's a lot that needs to happen in between the real estate and tokenization element, right? There's all this legal items, there's all this compliance, there's all of this that actually says this asset is tokenized here, and this person that owns that token can sell this asset. How do you then sell this asset cross-border as well at the same time, and have other countries recognize from a legal compliance perspective that, you can make this sell, you can buy it? And I'm sure we'll get there, and I'm sure as this space grows, because let's be honest, this space is way, as in it's not even fully matured. I mean, we're miles away off from maturity.
We don't even have the base layer all built up.
Exactly.
Absolutely.
But I think these concepts are great purely because you're moving that, you can go cross-border, and if you do have something that allows you to say, right, I genuinely legally hold the documentation, this documentation is, a representation in an NFT format, for example, for this particular token or for this particular real world asset, then great. I'm all for it. But I think until we get there, these are great ideas. These are great concepts. I'd love to see them actually sort of play itself out in the real world.
Yeah. I mean, we have a long way to go, and we'll see how it goes. I would love to have that conversation with you about tokenization sometime, because it's super interesting.
It is.
We'll probably be on the confines of this conversation today. Because
exactly. Well, look, I mean, so I'm sure people are seeing and wondering, the Wall Street area is over, and everybody wants to know a bit more about DeFi yield. So, I mean, let's jump in, because I'm curious. Obviously, co-author of The Wall Street Area is Over, which is a great book, by the way, but also co-founder of DeFi Yield. So why don't you tell us what's so great about DeFi Yield? What does it make? I suppose, what is it? Well, how different is it from everything else that's out there?
So I think there's a few things that are worth understanding. One is kind of just from the origin story.
Yeah.
It's, the language that I remember originally internally we said before DeFi Yield was anything, was, kind of buy yield farmers for yield farmers sort of thing, right? So we're actually doing it, and we want tools to help us do it. And we're encountering problems and, seeing rug pulls and scams and flash loan attacks and all these different things. And so we're trying to deal with it. So let's build some tools for us. And hey, listen, it turns out there's a whole community of people out there who want that. And, I think we did a great job of being really early to the game on yield farming specifically. If people want to check out our Telegram group, it's fantastic. It's arguably the best Telegram group out there on the subject of yield farming. And I think it's really interesting, just timing wise. You and I were talking about this kind of before. Is we had this big parabolic up run, and now the markets are kind of they took a dip and are going sideways. Well, where do you find the yield right now? Is in staking, rewards, lending, yield farming, etc. And that's mainly what we've been focused on. Like, of course, there's swaps and there's all this great stuff, but having tools to facilitate people making money, even when the market isn't going crazy, is really valuable to a lot of people.
It is.
I think that if you think about mass market adoption, where are you going to put your pension fund money, right? Yeah. You're like, hey, listen, I don't want to risk it going down 80%, but if I can put it in some place where I can get 8, 15, 20%, that's pretty attractive. And so looking at it from that narrative, looking at it from the perspective of, hey, listen, we've made some money. We're happy to have that money. Now we want it to be safer. We want to be able to work things out. I think that's really important to people. Now that comes into, what are the types of things that we're building? And again, I really encourage anyone to, first of all, read the book, because we put a lot of work into trying to make it a really great, really great book.
It is. I mean, I think, and I want to talk about this book a bit later as well in our interview today. But you're right. For those who are really looking to get an insight into really cryptocurrency, DeFi, you really outline some of these basic steps and just make it quite straightforward to understand.
Awesome. Yeah, that was definitely the goal. So then in terms of, like, you just look at, you're like, okay, if you're an outsider who's approaching this, what are you missing? And I think what I've been saying is we've been missing safety and accessibility. Trying to get into this stuff today is like trying to use MS-DOS, right? Like there's a lot of friction, it's got a lot of issues, etc. And so, it's like, well, what did Robinhood do for stock trading? They made it accessible to millions of people, made it easy, etc. I think kind of the objective of DeFi Yield is something similar, right? We say, hey, listen, if somebody goes and they put their money into some degen pool that, is promising, at the moment, 1 trillion% APY, and, then they get impermanent loss that wipes them out and stuff, they don't even know how to figure out, like, what is impermanent loss? How does this work? So, we have built, what is arguably the most sophisticated impermanent loss calculator on our website that people can go and use totally for free and see, hey, listen, what am I exposing myself to? How does this thing work? And get some really good calculation that's very verifiable. Then you've got rug pull attacks, and people are like, what's a rug pull? What? Infinite minting? How does this work? It's like, okay, well, we're building first of all, we've built basically a CoinGecko for auditing, which is fantastic. So you can see which projects are audited, et cetera. And I look at it as what Standard & Poor's does for the bond market, being able to provide credit ratings, et cetera. How do you bring that level of clarity to this space? And obviously that's something that's going to evolve over time. But, we're building machine learning tools to basically be able to audit smart contracts. Because right now, for months, we've been doing smart contract audits and putting them out to the community, et cetera. And we've built, a really good team. And we try to up our standards, decide, well, for people to hire a good firm to do a smart contract audit, you're talking like $30,000, and you're waiting in some case till November to do it, right?
Yeah, the backlog is huge on some of these audits on these auditing firms.
Exactly. So and projects come out. The APY is really high early on, and some people want to get in early, and then something happens. So as a result, it's like, all right, if you can have machine learning that's going to scan through and give you some degree of, hey, listen, here's how safe it is, that's amazing, right? That's a really, really phenomenal tool that's going to allow a lot more people to feel more comfortable and come to it, and hopefully bring, just many, many more people into the space where they can benefit from what is, the biggest revolution in finance in, I don't know, maybe how long, like 100 years or something?
It's game changing, to be honest, and to be in it at the beginning, we're still at the beginning, is it's a rare opportunity more than anything else.
Absolutely.
With your platform, I know you recently launched your own token, right? That kind of goes hand in hand with the platform.
So we announced that we're going to be launching it. Yeah,
right.
So okay. It's not out there yet, but we're going to be doing the offering here in the next few weeks.
Okay. And just out of curiosity, what's the utility behind the token itself?
Yeah, so to start off with, it's a governance token. So for people who are not aware, governance tokens allow you to basically vote on and influence the decisions, the direction of the project, including modifying the governance itself. And we did actually a really cool project where we had our CFO and team go through and audit all the top DeFi projects and look at how their governance works and things like this. I think we have a lot of responsibility because we have built a phenomenal community. I think probably the best community out there in the space of kind of smart contract audits and yield farming, et cetera. And so, it's really important that everything that we do measures up to an extremely high standard. So for us, it's like, all right, we want to make sure that we use the best blueprints and models in designing our token and governance protocols, et cetera. So one of the things a lot of people might not know is most tokens, including most governance tokens, don't have on-chain governance. They do this weird snapshot thing off-chain and then can be implemented. Well, that's not really decentralized. That's like one person really controls that. And so we have real on-chain governance in our token. And so people will be able to influence the direction of the project, be able to influence how the protocol develops, how the governance develops, et cetera. So that's a huge thing that the community seems to have said is valuable to them. And then there'll be some mistaken things as we go along.
One thing with governance, right? And I've spoken about this before, actually, and it's a very interesting topic. On one hand, I like the idea that the community has a say in the direction of the platform or the direction that you're going in. On the other hand, I sometimes tend to counter-argue that governance isn't always such a great thing either. And I'll say why, and I'll tell you why. Until you have a fully matured product that you've brought to market, depending on at what stage you release that governance, because if it's released too early, I would say that as a community, and I don't mean this negatively, but as a crypto community, some get it, some don't, some follow it for the hype, whatever you want to call it. Generally, I would say, the majority that I come across are not product owners, are not product developers, haven't necessarily been in software, don't really understand the software life cycle, right? And my background is in product development, which is why I always feel really strongly about giving governance over to any community that doesn't understand, I would say, the building blocks of how you move a product forward and what's best for the community. So sometimes my take is that governance tokens are great if the platform is matured, and really it's more that we're developing new features, and it's kind of which ones do you want to see more of versus the core product direction.
So I love that you bring this up, because I'm actually super interested in innovations in governance. Like, to me, the systems that we have in our mainstream society are very outdated, right? And there's lots of room to improve, and we don't really have systems to iterate. It's one of the things that I love about open finance is the pace of innovation is so high, because of the nature of how it works. And so I'm super interested in how there's going to be innovation in this space and this microcosm, which is relatively safe, right? Like, if you go and you change the Constitution of the United States, this is a fairly high risk thing to do. Whereas if you're sitting here and you say, hey, listen, we changed the protocol of some little shitcoin that just came out, that probably doesn't matter so much, and you can see, hey, listen, in kind of a game theory sort of way, how does this play out? So I'm really interested in where that goes. I totally agree with you that there are, some people I've often have quoted, there's a famous Winston Churchill quote, which says, the best argument against democracy is a 5-minute conversation with your average voter. And, I think there's something to be said for this, right? It's just like, hey, listen, Steve Jobs said, people don't know what they want. You have to show them what they want first. If you'd asked the Henry Ford quote, if I'd asked the people what they wanted, they would have said a faster horse and buggy, this sort of thing. So there is something to be said for that. That being said, I think as owners, the real value of a governance token, if it's properly implemented, is to protect the community. And so a really good example of this is the rate of inflation, right? We're talking about, hey, listen, do you have an infinite minting function? If I can go and mint this, I can basically scam the entire community. So, of course, there's things you can do to hard code into the smart contract, limitations on inflation and things like this. But there's also something to be said for, hey, let the community decide, hey, listen, we want to increase the inflation a little bit in order to fund some initiative. And I think as a check and balance, that's a really useful space that I think serves in most cases.
Okay. So one of the things I want to pick up on actually is, one of the main factors over the last few months, especially when we've had high rates on Ethereum, is DEXs, right?
Yes.
Those who have, I would say, a larger balance of crypto, they can somewhat, to a certain extent, afford to take the hit on fees when it comes to DEXs, right? And it's expensive. The transaction fees are, you know, practically through the roof. Obviously, when the market's down, they're not so much, but they are in comparison to where they have been in the past, right? And when Ethereum gets clogged, everyone feels the pain for it, and everyone pays for that pain as well. So one of the hyped up items that we've obviously seen recently is level 2 DEXs, right? L2 DEXs is kind of bridge your tokens over onto an L2 DEX, and then you can go ahead and perform everything you want to do, earn that yield at a fraction of the cost in terms of what it takes to interact with it. And I know at DeFiYield, you've already developed an L2 of your own, or can you talk a bit more about that?
Yeah, we're working on launching an L2 DEX, which is super exciting. I mean, obviously that space is a big deal, and obviously, you know, okay, we can take a look. What are these principal concerns, right? We have transaction fees, obviously, like you're mentioning, right? That was really what drove Binance Smart Chain to be so successful, right? Was you had all these people who were yield farming, and all their yields are coming out on Ethereum gas fees. You can go over to Binance Smart Chain, do better. Obviously now Polygon, the Matic is, you know, kind of the hot thing that we see today. Arbitrum is, you know, kind of the upcoming thing. So we're using ZK Snark. So I don't know how familiar people are with ZK rollups and how they work, but zero knowledge proofs are super interesting technology. And so being able to utilize zero knowledge proofs and aggregate these transactions and put them on is great, I think, in principally 3 ways. Number one is, of course, we have lower transaction fees. Second is you have faster transaction time, or potentially no gas, like gasless transactions. Fast transactions. And then the third is decentralization. Obviously, the concern with Binance Smart Chain is you've probably seen the memes out there of, you know, name all the node operators for that. It's all pictures of CZ, right?
That's it.
Yeah. So being able to achieve that decentralization is pretty important to people. So yeah, we're excited about that as, you know, one of the directions that we're moving in to try and help the community and just enable everything to work better.
Well, looking forward to the roadmap playing out then in that case, Michael. So
yeah, 100%.
Now, I mean, let's move on to this book of yours, which, you know, I would say is almost a DeFi Bible, right? Because a lot of what you've discussed, and I have gone through the book in various sections, you pick up here. Now, who's this book aimed at? Is it for your seasoned person that's been in crypto since 2011? Is it for somebody new? Where would you say this book of yours is aiming towards in terms of an audience?
Of course, I would hope that everybody can get some value out of it. And I'm super glad to hear that you, as somebody who's, you know, very experienced and has been in the space, obviously to a deep level, have got something out of it. That being said, I mean, it was really written with every attempt in mind to try and take somebody who doesn't have deep knowledge of the space, who's just kind of early into it, and being able to introduce them into this world. And so I think that when we wrote it, our basic attitude was, there's all these Coinbase users who aren't really exposed to the world of DeFi. So like they're not totally, you know, it's not that they don't know anything about crypto at all, but they know enough to buy some Bitcoin, buy some Ethereum on Coinbase or whatever. And now let's help them open up this whole other world and, you know, take them into the bowels of the beast, I guess, where they can hopefully learn all kinds of new things and make a lot more money and participate in what is, like I said, to me, it's the most revolutionary transformation in the world of finance in probably 100 years. No,
and actually it's interesting you mentioned that because you're right, because I think other than buying and selling crypto on exchanges, which is relatively quite straightforward, go in, you buy it at this price, you sell it at this price, you might want to push the boat out a little and have a limit order in there and, you know, right. But you're right, once we start delving into DeFi, I would say one thing that is for anyone new coming to DeFi is that it can be daunting. It is daunting, especially when you start looking at the terminology, right? What's yield farming? What's impermanent loss? What do you mean? Like I can put coins in, but then I'll make some profit, but then I could lose as well at the same time. You know, all of these things, and I think having that basic understanding, that concept of what it is, certainly helps anyone new to crypto navigate, because you know, there is some significant yield to be generated from within the DeFi space, right? If you're genuinely not trading, if you genuinely are, I would say, you know, a long-term holder, and you want to work and you want to make your crypto work for you passively without risking it too much, then DeFi certainly is an area that's definitely worth exploring, because you can pretty much enjoy the upsides from both sides of holding and also growing that holding as well at the same time.
100%. Yeah, I think even if somebody is not so sure, I would just encourage them, try getting in a little bit to just at least learn what the space is about. You know, like that was the first thing that I was told by, you know, someone on our team before I'd started doing yield farming or whatever.
Yeah.
And they're just like, hey, listen, throw in $1,000. You may lose some money. Don't worry about it. It's just a learning experience. Let's get in. And I think that's so valuable. So, you know, I would say go, you know, you can use our website. You can go to, there's a variety of them, obviously, DeFiYield.app. You can go and connect your wallet. It's super easy. You can see, you know, your portfolio and how it changes. You can add and remove liquidity, etc. Like, go and get into it and just see what the space is about, because this space is going to be orders of magnitude bigger over the next 10 years. And, you know, probably people who didn't buy Amazon in 2000, even though it was really high, are kicking themselves today that
exactly.
So, same idea.
So it's interesting you say that, because you know, into the frying pan, put $1,000 in, and you know, kind of understand and see where you end up. You could go into the frying pan with that $1,000, and that $1,000 could potentially turn into, you know, 2,000, 4,000, 8,000, 10,000, right? I mean, a 4 or 5x in crypto is really nothing, in all honesty, right? People turn their nose up at 4 and 5x, right? Everyone wants their 10s, 20s, 30s, right? But saying that, you have made profit, right? And so, and I know that you're also an international tax expert. So my question to you is, and obviously, and I think people do need to know, because I would say a lot of people that I've worked with in my social circles, they're in crypto, but they don't want to pay the tax, right? They're like, well, I'm in crypto, it's fine, I've made some money, who's going to know? It's all decentralized. But, you know, do platforms like Coinbase and Binance, you know, do they report to the IRS or the SEC or HMRC, in my case, from a UK perspective?
Yeah, I mean, that is certainly true that maybe if you're in El Salvador, they're not reporting
obviously
to your government. But if you're in any of these major countries, just consider any of these major platforms is going to report to your government.
Yeah.
And if you're not reporting it, it's a ticking time bomb. So you want to make sure that you plan appropriately for it. And if you're in the beneficial position that you made a lot of money, or you're thinking you're going to be making a lot of money, I mean, you're going to have some resources to be able to plan around it. And I would highly encourage people to do that well, because, you know, the difference between having, you know, as much money as you make or half as much is could be a pretty life-changing amount.
That's right. So, yeah, profit's profit. Yeah. But just for the viewers, please don't give this a thumbs down. That's not Michael's view. We're just following. We're following compliance here more than anything else. Yeah. We don't make those rules. And I mean, okay, and fine. And obviously, one thing is, what can we do to maybe minimize some of that tax income?
Yeah. So I mean, you know, depending on where you are in the world, if you're an American, you know, you have less options than people basically everywhere else in the world. So if you're an American, you can possibly operate through a company that could be useful to you. You can move to Puerto Rico, that could be useful to you. There's obviously some local tax planning. You could renounce your U.S. citizenship. So it is very much case by case. And I've made like a ton of videos. I have a channel, Offshore Citizen. People can go and check it out if they want. Go and watch all kinds of videos that are specific to, like, here's Americans, here's if you're yield farming versus if you're trading versus if you're whatever, because there are complex differences. But what I would say is, if you start making any reasonable money staking, yield farming, lending, it probably pays you to operate through a company. Usually that you're going to get a bunch of advantages by doing that. So that's the first thing. Second, if you want to be extreme, you can absolutely go live in another country, and that can benefit you quite a bit. We're seeing lots of people go from UK to Portugal. I have people contact me every day who want to do this, or go to Cyprus, or go to Thailand, go to Dubai, or wherever. So that's kind of a more extreme way to go. And then if you're talking about just normal stuff, I think it's important that you understand how to keep track of and report your gains so you don't mess it up. And so again, you can there's a variety of tools, but we built one so you can plug in your wallet and it'll show you how your portfolio has changed over time and track transactions. Because this is super hard, right? Like,
yeah,
I'm farming on auto farm and I'm harvesting my auto and then I'm getting rewards in another token. And is it taxable based on when I got that? And how did the price change? And then I swapped it into BNB and then, like, this is very complicated. So much easier to have a tool. You can go to DeFiYield.app. You can connect your wallet. It'll keep track of everything for you. You don't have to. It makes it very easy. And because in some countries you can be subject to all kinds of fines if you misreport and all this. So yeah, I would say A, keep track of it properly. B, possibly operate through a company if it makes sense. If you have long-term capital gains, that's good. If you're extreme, you want to move to another country, fantastic. And if you start making a lot of money, you can afford to pay for some sophisticated tax planning. And go check out some of my videos for that.
There you go. Perfect. Well, look, Michael, thank you so much for coming on the show today. It's such a. I knew we were going to talk about DeFi. I knew we were going to talk about DeFi app, but to be honest, we've kind of touched on so many different topics that I think I'd love to have you back on, and I think we would love to just dig deep down into certain, I would say, hot topics. I would love to, because I think it was a great show as always, and I really enjoyed having you on. And I would say, for the viewers who haven't had a chance, do check out this book. The Wall Street Era is Over. Definitely worth checking out. It's got something for everybody in it. And I think there's a lot of knowledge that can be gained just to kind of get yourself a bit more updated in this space, because it changes so much. And I think having a guide does help you. So, Michael, all the best with DeFiYield. I'm definitely looking forward to the roadmap and your rollouts as they come and go. And I hope to have you back on the show as well, because I would love to pick another topic with you one day.
Yeah, sounds fantastic. I would love to discuss. It's like super fun to geek out about all the little nuances here. There's so much to discuss. So really appreciate you having me on.
No, thank you, Michael. Speak to you soon.